Review for March 21st, 2025. My program crashed and deleted all the drawings I had drawn on today. So no drawings today. It ended up being a trending trading range day. We had obviously a lower a lower trading range, and then a breakout, and then an upper trading range. So a reasonably common day. Coming into the day, there was this sell-off, these four strong bear bars, and I personally was a little bit more bearish on the day. It was into support though, four strong bear bars. We failed here once, we failed here again. So that was important to keep in mind. It's also potentially, a later leg, but I thought that this was strong enough that we should get a little bit more to the downside. Obviously, we did not end up getting it. What I thought was important was the gap with the prior day's low. Anytime you get a gap down, I pay a lot of attention to the low of the prior day, because if we keep this gap open and get a couple of strong reversals down, then odds are we're going to go quite a bit lower. But obviously in this case, we ended up, I'm sorry, my chart's just, obviously in this case, we ended up closing the gap with the prior day's low on bar 18, and then not getting, I'm sorry, this is taking a second. We ended up closing the gap with the prior day's low on bar 18, which decreased the chances of some sort of bear trend forming out of these four bars, or out of these legs. And obviously they ended up becoming three legs down in a trading range. So we had a large gap down on the day and started off with a trading range open. Nothing in here is really all that tradable. Odds are that the gap down should get some sort of second leg. 7 and 8, pretty strong bear bars. 7 and 8 might need a second leg. It's probably not super unreasonable to sell to close bait, taking a chance that we sell off, but a lot of traders will be pretty quick to get out after 9. 9, you could argue it's a lower low double bottom. It's an expanding triangle. It's the bottom, or it's the middle of a tight trading range though, and 7 and 8 might still need a second leg. So the issue with buying above 9 is that 7 and 8 are probably still going to need a second leg. There's nothing wrong with doing it for a swing trade, but you have to think about how you're going to manage it. If you're buying above 9 and you exited below 14, then you can't really take this trade. If you're buying above 9, you need to either hold until probably bar 19, maybe 21, or ideally you just buy and you obey your stop and you do really well on the day. The reason that I say that is because a trade like bar 9 is not a high probability trade. It's a relatively low probability trade. But if you're going to buy the close of 9, you have to make it worth your while to take that sort of trade. And a lot of times you're going to get stopped out, but occasionally it'll be the low of the day, or at least the low of a couple of hours. So, there's nothing wrong with buying and exiting below 21. I just think that if you're going to buy, it's maybe a little better to just hold potentially through the whole day and let your stop get run. Or, I think exiting below 21 is fine, or exiting below 19. But those are two reasonable ways to manage the trade. But again, you cannot buy above 9 and just exit below 14. 60% of the time, the market tries to trap out swing traders. So it just ends up being a test of the resolve, or of the bulls who bought above the bar 9 high. So if anything, if you bought above 9, you probably want to buy more at the 14 high. I don't know if we got two times the risk. That would be the minimum profit target. Looks like we did. Yeah, so we did get 2 times the risk. So taking a piece off at 2 times the risk is definitely reasonable as well. Or exiting the whole thing. If I'm taking a trade like this, I'd probably just try to hold a little bit more. 10 and 11, you can buy the close of 11. I did buy the close of 11 on this day. I considered buying more on the close of bar 14. I did not. I ended up just waiting. And then 15, 16, 17. I found that I'm a lot more comfortable just holding trades always in. So I held it in an always in fashion, and I exited on the close of 22, which I think is fine. There's nothing wrong with holding through here, taking a chance we get another leg up. I had something to take in order to take partial profits at the 61 low if it got there, and it did not. So I ended up getting out down here for around break even. I don't really have an issue with that. The thing about trading this style that I'm talking about, like this always in holding style, is a lot of times you're just going to end up breaking even on a lot of trades. And then you'll have a couple of, really large winners to offset your break even trades. So I exited 22. I thought it was okay to exit below 21, but I gave the trade a chance to fail. Basically gave the bulls a chance to get a big bull bar on 22. And then when it started to fail, I just exited. So 15, 16, 17 should get a third leg. This is leg 1, and we have a pullback, and this is leg 2. I've been thinking about pullbacks, and I really think that trendline breaks are what's mostly related to. One second. I'm sorry, I had to sneeze, but for some reason it won't let me pause my video. I don't know what's going on with my computer today. There's something wrong with my recording, um, and this program isn't like it crashed a minute ago. So I don't know what's going on. But anyways, 15, 16, 17. Odds are we're going to get another leg up, and that would be leg three. I've been thinking a lot about second and third legs, and I think trendline breaks are what causes legs, because I was thinking about it, and I'm trying to define or make a definition for leg counting, because I can see it, but I see it better after, obviously, and I'm trying to come up with a concrete definition for it, which helps me see it better in real time. And I see three legs down here, but why do I see three legs? And the answer I have come up with so far is that I see a trend line break on 50, so that ends this leg, and then I see a trend line break here, and that ends this leg, and then I see a trend line break 71, and that ends the three legs down. So it's probably better to think about leg counting that way rather than just kind of eyeballing it, because obviously it takes more time. And then we have implied third legs like bar 20, 29. I have to think a lot about, how I'm going to create a definition, because obviously we have leg one down and then a trend line break on 25, leg two down, and then, maybe not even really a trend line break. You could argue the trend line break is 30, and you could say the third leg is the tail on 31. If you wanted to count trend or legs that way, I think that's reasonable. But also, bar 29 is definitely an implied third leg. So I have to figure out some sort of way to add that into my definition. So 24 through 20 or 21 through 24 is going to get another leg down. I sold the close of 23. I sold more during 28. I was going to exit if 28 closed on its high, but it did not. So I ended up exiting above 31. And then I bought the close of 33, and I held until over here, which really, I knew it was three legs down. I thought that it was probably better to have exited on the close of 54. I'm trying to be able to hold through. I'm okay with holding through complex pullbacks, but I probably shouldn't hold through a bunch of complex pullbacks. I should probably only hold through one. So about the close of 33, I held. I thought we were going a lot higher, obviously, with this. And then we got a pullback. So spike, pullback, channel, leg two. And you could argue there's three legs in the channel: one, pullback, two, pullback, three. Or then you could argue three legs down: one, pullback, two, pullback, three. I thought that it was bad to exit down here because we had three legs down. They're minor trend line breaks, right? 45 trades above 44, breaking the trend line from 43 and 44. 47 trades above 46, breaking the trend line from 45 and 46. 50 trades above 49, breaking the trend line from 48, 49. So it's three legs down. And, if you're going to count them that way, you could argue that this is only two legs: one, and then trend line break, two, and then obviously this trend line break. So maybe this was leg three. Or you could argue this whole thing was a complex: leg one, pullback, leg two, leg three. I'm trying to figure out an exact definition for leg counting, because it's really easy for me at this point to look at the day at the end of the day and say, oh, this is three legs down, this is three legs up, whatever. But it's obviously harder in real time. So I'm trying to think of a way to define it. My way to define it. Everybody's is going to be different. That is useful. So that's basically what I'm going to be spending my whole weekend doing, is working on my leg counting definitions. And pretty much all I have so far, I spent an hour or two yesterday, is trend line breaks are important. And how do you even define a leg count reset, right? So, if the market is getting, six legs in one direction, well, it was three legs at one point. When did the count reset? What qualifies as a reset of the count? What does the market have to do? And, something along the lines of, when I saw 36 yesterday, I think of this as a leg count reset, 36, or at least an attempt to reset the count. So what has to happen to confirm that the count has reset? Maybe a test of the trend line, and then a new low, right? So that could confirm we're going lower. Or you could argue a test of the breakout point, the 35 low, because 36 was the breakout and the 35 low was the breakout point. You could argue that. So it's just, I don't have answers for you right now. I'm just asking you guys the questions I'm asking myself, essentially. But anyways, tight channel down here. So this rally, as good as it looks, it probably will be relatively short-lived. We'll probably get a second leg down from 43 to 49. I was, initially my plan was after this sell-off, I was going to exit at the 42 close, but this rally was so strong that I thought it would get another leg. So I ended up deciding to wait, and I probably could have done better by just exiting on the. I think exiting on the close of 54 is a realistic way for me to exit. So I think that's probably my spot to get out, because if 55 is a big bull bar closing near its high, I can just get back in. So I could exit on the close of 54. 55, disappointing. You know that 53 and 54 is going to get a second leg down. 56, 57, pullback, and then 59, 60. 3 bull bars, 3-bar micro channel should get a second leg up. It ran the 150% stop to the tick. Like I said, I was still long at this point, and I ended up exiting down here. Not really a great exit on my part, but I was kind of tired at that point in the day, and it was relatively break even on the day. So I exited down here. I considered selling 68, but if I was going to sell 68, I probably would have had to be pretty quick to get out on 69 or 70. And then we have another trend line break, 71, and then we have this leg up. So when you look at it at the end of the day, it was a bull trend day, because if you look at it on the daily chart, it opened near its low and it closed near its high. But the reality is that 31 bars in a trading range there, 41 bars in a trading range here. So it's like 70 of the 81 bars are in a trading range. So, and that's fairly common. Most days spend at least 4 hours in a trading range. Anyways, for trades on the day, you could take the swing trade 9. You could buy the close 10, 11. You could buy these closes. It's a little bit risky to buy these closes. Just in case we reverse down from the moving average, a 3-bar micro channel at the moving average with no micro gap, not really that great. Should be support here though at the 17 high. Why? Because bar 18 is a surprise. So when bar 18 is a surprise, odds are that, not necessarily bar 18, but when you have a 3-bar micro channel, odds are you get a pullback. So if you get a 4th bar, it's a surprise. And when you get that 4th bar, odds are there'll be support at the low of it. So it's possibly one of the reasons we tested into that area on the bar 25 rally. 21 through 24, a decent sell-off, should get a second leg. You could sell below 21. I think 21 is a little bit risky, but definitely okay to sell the close of 22. Nothing wrong with selling below 21. It's just a little more of a swing trade. And then we get 3 legs down, however you want to count it. I need to work on my definition of how exactly I want to count legs. Because again, I can sit here and I can divvy all these up, very, very well. At the end of the day, it's not hard to see the legs, but I need a better way to do it in real time. And then 31 through 33, you can buy these closes. Odds are that we get another leg up. I think this is a pretty clear leg 1. It's resetting the count. Why is it resetting the count? Because it's really strong. That's not a good enough answer. I need to continue working on my definition to get a better answer. Anyways, really, really strong. It's possibly 3 legs up, 31 or 3, 19, 35, but I don't really care. I think that this is the strongest leg by far. So I think odds are it's going to go higher. You could get out below 45. I would not get out below 48, because then you're getting out below a 3rd leg down, 3 trend line breaks. You could buy the close 50. You probably make something on the way up to 42, and then 3 legs down, and then 1 leg up. What leg is this? It's easy to say like 2 or 3 now, but obviously it's harder in real time. And why does this reset the count? You have to think about all those things and work on them. So if you could have bought these closes, it's just the middle of a trading range, but you could have done it. I don't really have an issue with that. 66 failed to get the second leg to the bar 63 close. The daily chart, I'm still not overly convinced. We're going a whole bunch higher. This just looks like a tight trading range to me. So buying above here probably will fail. I do think, again, we have to go back to 5,500. It's just a question of, are we going to bounce a little more first? How deep is the pullback going to be? That's really my only question. I know that I'm very, very confident we're going 5,500. but I just don't know what the pullback is going to look like. The weekly chart, obviously, we got a bull close, but after 4 straight bear bars and then a bull close, a lot of traders willing to sell this bull close and scale in higher. All right, that is going to